Dobro večer, dobro večer. Da li ste podgotveni za ošte jedno gemiđijsko rokanje? Kako da? Kako da? Ajde sad kažem. Вчера инвестирали, мисля, да инвестираат $1 милион Що? Викам вчера кажа дека ќе инвестираат $1 милион во Nokia, брата, и цигла на Nokia. Ќе ги реставрираат, па ќе дигнат $1 милиард. Цигла на Nokia $5 на $10 и пола сат. Ова е истина на што звучи да пати. Различни да бетна си да кодај. Вие се од манифест. Нема има тренер за исхрана, нема алкохол. Мора под контрола. Знаеш, Кока-кола зеро се пие, ама она ребра да ги бива. Нормално. Брати, мирна, јачна. Вчера почнем брати вечер. Пункт правим. Јесна пункт. А ти можеш да си буја. Скоро 0 калории. Скоро полавар изборот. Помалку не пола, помалку лош избор. Уште нешто, малку да се забори. Купи продаја работа. Леле, ерџа. Ерџа.
Evo prostor za kola.
Predlovi to otvaraš vrata, gledaš, ok, pa si će to prekidaju.
Ще 100 kada najme za papir.
Kako reći?
Nema, to samo treba. Daj samo 100 evra.
Zašto pa se ti počne? This is end. I don't even know.
Simer, n-am una crowd diameter, ia și. Scros na crowd.
Da, što je to tipo djeska? Mani se pravi.
Mani big swirl go around.
После се стана kako se. Ne znam sad što je. Ne čepke se.
Hello. Let's hear for the first time. Please raise your I think it's more than 5. Huh? More voice? Can you hear me now? How about now? Okay. Okay, so for the newcomers, I'm Danko, and I'm gonna be your host tonight. If I can help you with anything, please talk to me. So for you, some information. This is the official website, cryptohubmalta.org. On the top here, you find all the social links. Next, on the balcony, there is a scan with a QR code. You scan it to join our Telegram group, where you can ask any question. And a little bit of advice for you. Try to make friends here. Don't be shy. Talk to anyone. We're here for 2 reasons. Learn something new and meet interesting people. Now, believe it or not, okay, let me do a test. How many events did we hold here on Insol until now? Your opinion. Who's gonna try? 200. No, 300.
Started with series in March.
Exactly. And
And
that's
since then, it's around 40 per year.
133. Okay, 133 events. My opinion. My opinion, it's an impressive result, which could not be achieved without a warm crowd like you. And also, without the support of our sponsors. So, first of all, Soho, which is the building. Which is Soho, which is the building in which you are right now. They offer co-working spaces and services for business. And they also give us this amazing venue every week. And I want a special thank also for the best barman on the island. Nico, Marcia. Not to forget WH Partners, the law firm, Maltese law firm, which is with us since the very, very beginning. They offer multidisciplinary and multi-jurisdictional help. If you need any help from them, just go ask to talk to Galina and Joe. They will certainly help you. Also, thanks to the Bit Research, trading company operating in Malta, specializing in crypto and forex. And for developers and traders, they are constantly looking for professionals to collaborate with. And friend, special thanks to you for the event you ran last week. Friend, gave us a very insightful speech on stablecoin. Thank you for that. Now, about today. You remember September 19th this year, 2025, there was a special event. It was presented by Francesco. Where's Francesco? Raise your hand. Event you presented in February. It was called What's the Problem?
There were many times.
It was called What's the Problem? It was based on a video produced by an English physicist, Joe Bryan. The video is also what is it called? What's the problem? You can actually see here. This is the original video. Okay? It's called What's the Problem? You just go on YouTube and you load it. This is probably one of the best videos ever created to introduce what's the problem with sound money, actually with non-sound money. And then on our channel here, on YouTube, Crypto Hub Malta, you just search for this, you will find it. And then inside this channel, you will look for what's the problem. This is the event we recorded in February. If you are new to these concepts, libertarian concepts like sound money, Bitcoin, that's where you should start. This is the best you can get. The original video is like 30 minutes. Free your head, turn off your phone, just listen to this video for 30 minutes. You will take it. Now, I'm particularly happy about today's event because, in my opinion, it's like the continuation of that event. And for those who don't know Antonio, well, he's a beloved speaker here at the Hub. For those who don't know, he has a background in financial law. He has been a lawyer by trade for a few years. Now he's here in Malta. But he runs the biggest crypto educational community on YouTube in Macedonian language. They have nearly 6,000 subscribers, which for me is a great success considering the situation. So, I don't want to waste more time. So, please give him a warm welcome.
So, good evening, everybody. I stopped counting because you guys have like 133 so far episodes. I have like 13 of them, more or less, so I stopped counting. But thank you for welcoming me again. Now, since today is Halloween, what's better than to tell a scary story, right? Now, this is the scariest story you've ever heard. It's called the M2 supply and the prices of capital goods. It doesn't sound scary, but trust me, we'll get there. Now, before we do that, before we go to this, since I'm here like 10, 11, 12 times, I feel you guys like family. I've seen a lot of familiar faces. And today is a very special day for me. So, just like you all, I do have a let's say hero of my own, right? And this hero today is actually it's his birthday. So now he's watching me actually on our channel. And I just wanted to take a few seconds to say that we all have a hero that we grew up with, that we look up on. And this guy is, how can I tell you guys, my absolute best. If I can be one half of what he is today, it will be my life's, let's say, achievement. So thank you to that guy that is looking at me in the camera right now. Thank you for everything he's done for me. And today we can start with the scary story, right? His name is Tony. He's my uncle, and he's, what can I tell you guys? You all have one of those, right? The greatest guy for you in your life, right? Somebody you look up on, somebody that gave you all the right, let's say, sentences in the right times of life. So I hope you understand what I'm trying to say, but sometimes we need to take a minute of our life to say thank you, right? So as I said, just like you guys, this is my guy, a special one, and I have to say happy birthday. Thank you, I really appreciate it. Thank you. Now, as you know, practically M2 is a very economical term, very, let's say, technical term, but we need to break it down. I want to make it as simple as possible for you to understand where exactly is the problem, as actually our host has said, right? So we need to understand what is the problem. What is actually happening with the sound money has nothing to do with sound money anymore. So we're going to break it down. I'm going to try to do it in the simplest concepts for you to understand. And we're going to go through the root problem, and then we're going to understand why anything but money is a better idea right now to be stored in your portfolios. Now, we're going to start from the basic term of M2. M2 is practically the measure of money that we have in the world. Now, M2 can be on a certain country, or it can be on a global level. But the idea of the M2 supply is that we need to take in account everything that is money that can be spent fast, let's say it like that. Now over here we have several categories of those money, let's say, types of payment, let's say, medium that we have. The first one is obviously the cash. We're talking about any kind of banknotes and coins that we have. So in certain countries, all the cash, we're talking about banknotes and coins, are actually part of the M2 supply. So we need to see what actually is the M2 supply, what is encompassed, what is actually together in all this, let's say, mass of money that we have. The second thing is the debit deposit. These are money that you have in your debit account. So this is something you can use at any time. You have it, and you can use it at any time for any kind of payment. Then we have the savings account. This is something you usually don't use, but if you need to, it's there, and you can liquidate it right away. So we're talking about very liquid type of money, right? Something you can use whenever you need. The next one is the short-term certificates. These are any kind of certificates that are less than 6 months. So let's say you lend us, let's say, 2,000 euros to the bank for 3 months. This is practically short-term certificates that still counts as liquid money because it's a very short term of time that you're actually lending it to. And the money market fund, again, these are private type of organizations that you can actually invest your money in, and they invest in very short-term debt. So practically they lend to a bank or to a corporation for a very short term. And this way, again, this is counted as a liquid money. So all these are actually encompassed in the M2 supply. This is what we say is the money that we currently have in the society, in one country or in a global level. Now, once we understood what is actually money, these are all the money that we have floating around. From the moment you pay the barman for your beer, to literally everything you pay online, these are M2. This is the money supply. Now, you understand where is the problem with the money supply? Where did it came from? In the 1944, we had this amazing thing called the Bretton Woods Agreement. Believe it or not, this is the first and less smart thing that the Americans have done. That's it. Now, why am I saying this? This was an agreement where people sat down and said, listen, guys, this is not working anymore. We had too many hyperinflations. We need to figure out how to make the sound money to be actually sound. So how did they do that? They said, listen, we are going to base them on the gold standard. How do we do that? This was done a lot of times through history, and it always fails because of the same reason, human greed. Because if you base your money on gold, then you cannot debase them, otherwise they will fail. So what did they do? Again, they said, listen, we're going to do like this. You have, let's say, 3,000 tons of gold. So these 3,000 tons of gold are the amount that you can have in paper money, paper value. Why is it like that? So how did they do that? They said, listen, from now on, we're going to do a international measurement, which means every time you want to exchange money for gold, it's going to be for the same price. And they said, from this point onwards, 1944 and onwards, we're going to exchange 1 ounce of gold for $35, and then onwards, this 1 ounce of gold will be equal to 360 yen, 625 lira, 4.2 Deutschmarks, etc., etc. So they set up a fixed system, which means as long as you don't print more money than you have gold, guess what? You don't lose value of your money. Which means from 1944, as long as you don't print more money than you have gold, you will always have a currency that has the same exchange rate. There is no FX trading, doesn't exist. Why? Because it's always the same. 1 ounce is $35, 4.2 Deutschmarks, 2.8 pounds, which means there is no exchange differences. And what does that lead to? There is no inflation. Because if you have currently the money that does not change the amount in the economy, guess what? The inflation doesn't rise. Let's put this in a simple concept. So how do we explain inflation? Let's say that in this, for example, closed environment, we're going to see this is a closed economical circle, right? Let's say ecosystem. So if we have, since we are in beers here, I'm not going to use beers, otherwise we use let's say we have 10 beers and we have $10. In this closed economical system, every beer will be equal to $1, right? 10 beers, $10. Easy as that. There we go. Easy as that. This is exactly that. But where is the problem now? If I open the door and I throw $10 more inside, guess what? Now every beer will be $2, which means now we just experienced inflation of 50% because somebody added money to the system. Now, what do we need to understand? In this kind of a system, where you have a fixed price, there is no inflation. So, in the long term, these kind of systems, they will not have inflation. They will have deflation. Why? If you have currently the same amount of money and you don't change it, guess what? Over time, there will be more beers. The bartender comes again tomorrow. Instead of 10, he brings 20 beers. But the same amount of money is because why? We said we're not going to print more money because we do not have more gold. And what happens now? Instead of 2, because we have 20 beers, but the amount of money stays the same, guess what? Now every beer is what? 50 cents. Which means if we do not have printing of money and inflation, we will not have rising of prices of anything. It's going to be the other way around. But where is the problem here? For every time you want to print more money, you are the American government. You say, listen, guys, with this amount of gold, we can have this amount of money. And we cannot have more. We do not have the right to print more. And we need more money. We want to build more roads. We want to build more rockets to fall on children, etc., etc. How do we do that? We need to find more gold. But there is no more gold. We need to pay for this gold, right? So what did they say? Okay, you know what, guys? We don't want to play anymore. Okay, since we can, we want to do like that, right? So this guy, maybe you know him, maybe you don't, but
the strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connolly to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. Now, what is this action, which is very technical? What is?
Yes, it's very technical. It's called the money heist. This is the biggest money heist in history. Done in less than 1 minute on a TV and radio. The guy just said, you know what, guys? Until yesterday, you could change your dollars into gold, but not anymore. Now, unfortunately, you're left with this toilet paper we call money today. Why am I saying toilet paper? From this moment onwards, since they couldn't print any more money to do whatever they want with this money, now since they said, you know what, guys, we're not going to have a gold standard anymore. Like many times in history, guess what happens next? Now this happened in 1970. And from 1970, look at the decline of the value of the dollar. Why is this so important? It's not that there was no decline before, but as you can see, from 1940 to 1970, there was some kind of a stability because they couldn't print if they didn't have more gold. The moment they said, you know what, guys, we're not gonna count anymore our, let's say, amount of money equal to the gold that we have. Guess what happens? Every time in history, doesn't matter if it's the Deutschmark, if it's the yen, if it's the Reichmark, if it's the US dollar, pound sterling, every time the country went off the gold standard. This is the gold standard. They went and they devalued their own currency to 99.9%. Currently, the pound sterling, believe it or not, in the last 100 years, they managed to devalue it to 99.9%. Only place I've seen this before is in a meme coin. This is the only place I've seen this kind of a devaluation, and Terra Luna. Terra Luna also had this kind of a devaluation. So that's it. Now, why is this so important? When you do this, how did we say? We have a situation where we have beers and money, right? Very, very simple. Can you imagine what's going to happen? If you have 10 beers and $10, then every beer is $1. Then somebody opens the door and puts 10 more dollars. Now immediately every beer is $2. Then they open the door and they put $80. Now out of a sudden every beer is what? $10. See this guy behind? He's the magician. He is the magician. He has the biggest printer in the world, the guy. So what do we see? This is not only America, let's be honest. There is no country in the world that does not print money like there is no tomorrow. Look at this. The biggest economies in the world. Japan, leading the charge. Now, this is what I'm talking about, toilet paper. Look at this. Germany, United States, China, European Union, everybody prints money. And you know what's the sad part? A month ago, Lagarde, one of my favorite, I have to say, comes out and says like this. When you give us CBDC and digital euro, the best part, she says, I will be accountable for every euro. I will be personally responsible. So these guys, when they had to print, so they had to take the money, take the color, do it to the printer. They have to still do some kind of a law to actually approve this. They managed to devalue the currencies to 99.9%. Now imagine giving these people, they don't need to print anymore. They just press a button. And magically, the door appears by itself and $100 more come into the system. Now every beer is $20. Magic, right? And she says, don't worry, guys, I'm going to be personally responsible. Since they did so good of a job, now we need to give them the digital button to print. Imagine that. Now, where did this printing actually came from? The first and the best. These guys, as we call them on our channel, the banksters. The banksters are the only legal criminals in the world. These guys are pure magicians. The only one that is better is the guy that is speaking now that I'm speaking, but in America, on the other side, in the Federal Reserve for the FOMC meeting. So what do? Before, a long time ago, banks actually, believe it or not, were holding your money. So when you give a bank $100, they actually keep some of them around, because you maybe come back for it, So what happens then? They say, guys, why are we keeping this money? This guy is not going to come right away. If somebody comes, we'll give somebody else's money. It's okay. It's just money, right? So they came up with this magical idea called fractional banking. Now, we're talking about the biggest Ponzi scheme in the world. And if we do that, we're going to end up 50 years in prison. But if you're called Jamie Dimon, no problem, guys. It's okay. It's the same club. So what's this one? This one is pure magic. What's this? So they say like this. So let's say one of my friends over here, Matsko, he says, I'm going to go and have $100,000. I'm going to put them in the bank. They'll give me 1.1%. Imagine that 1.1%. So anyway, it's something, right? So you give this $100,000 and you say, okay, they are in the bank, safe. When I need them, I can come and pick them up. Guess what? You cannot. Why? Because the bank, the moment the Matsko comes from one exit, from one entrance, give the $100,000. They go literally take this money through the other, let's say, window, and to another guy, let's say, John. They say, you know what? You need some money? Yes. Let me give you 90,000. Now, this was the let's say recent history where they still had to keep 10% of every deposit to have at least some money if somebody comes back. It was recently, so that's not anymore. But let's just explain it for explanation purposes. So what happens now? Now John has 90,000, and he says, you know what? I'm going to go to the next bank. They're giving a bigger loan. I'm going to get like 3%. Over here, I need to pay only 1%, and then I'm going to get some in between, right? So he goes with his 90,000 to the next bank. Guess what happens? Same. He goes inside. He gives the 90,000, and then they take this 90,000 and 1,000 of these, because 10% they need to keep as a reserve, they give to the next guy. So the magic goes on and on. And believe it or not, from the initial 100,000, they managed to produce $1 million with 900,000 worth of debt. When they were spinning this money around, they actually managed to create debt, which is almost 10 times the amount that you have actually given to the first bank. And believe it or not, this is legal. So where is the worst part? In the past, if something like this happened, and we've seen, let's say, for example, 2007, 2008, the biggest crash of the banks in the world, was actually a similar situation like this. Why? Because if the first guy comes back and says, you know what, I want my 100,000 back, the bank does not have them. Magic. And you know what's the interesting part? Everybody knows that, and everybody still is panicking when they go back and they say, you know what, we don't have your money. And everybody knows this is actually happening. But anyway, so we come to the next one. Oh, this guy. I love it. So what happens now? Look at this. At the beginning, there was a certain amount of every deposit that the bank had to hold. So that way they have some kind of a security. Even better, the central bank of every country was supposed to hold part of the deposits of this bank, just in case. Because that way, if we have, like, for example, 20% of the bank's deposits, you can control the bank. If they do something bad, you have some money to give them to take them out of the problems that they are in. Usually, what's the problem of a bank? Liquidity, right? So what happened next? These guys have managed to lower that to absolute zero. So currently, in America, no bank needs to hold literally 1 cent of what you're depositing. So the guy at the beginning, John, if he deposited 100,000, now they can take the whole 100,000 and give it to Jack. Zero. So the bank holds zero of your deposit. And now people are saying, so what do we do? Where is the liquidity? How are they covering this? What do we do if we have a bank run? Now, what's a bank run? Jack comes back and says, you know what? I want my 100,000. They say, oh, you know what? We have difficulty. We need to check. Can you come tomorrow? And Jack gets panicked. So he calls everybody. John, Jill, Joanne, everybody. He said, listen, guys, go take your money. These guys do not have them. And everybody knows they do not have them. So that's called the bank run. Because then what happens? Panic spreads, and everybody goes to their banks, and everybody asks for their money, and nobody has the money. And voila, we have a collapse of a lot of banks. 2007, 2008, short term, let's say in a nutshell. So what happens now? 2023, they came up with this amazing, how can I say? What can I tell you guys? This is a cartel. When they tell you that there is a cartel in Venezuela, guys, Venezuela, Colombia, that's child's play, man. This is like kids playing in a sandbox. This is the cartel. Now, this is the actual cartel. What's this? So 2023, they said, you know what, guys? Don't worry. 4 banks collapsed? Not a problem. We'll just open a magical window. How much money you need? John, Jack, Jill, and everybody is asking. It's like 2 billion. No problem. Here you go. 2 billion. We print out fresh from the oven, still warm. Now, this is how they sold the 2023.
Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve, an infinite amount of cash at the Federal Reserve, an infinite amount of cash at the Federal Reserve. Your ATM is safe, your banks are safe, your ATM is safe, your bank.
In a normal country, you go out like this, and you say, you know what, guys? I'm going to tell you a trick. We can print out as much as we want. They would take you out like a dog, on the square and shoot you, period. Why am I saying this? There was one of the biggest economists of the world. You know what he said? If everyday people understand what's fractional reserve banking and how does the system work, tomorrow we will have a revolution and all of us that are actually running this country will be dead. Because this is the biggest crime that ever was. The guy just told the whole world, guys, don't worry, we'll print out as much as we need. Guys, but where does this money come from? What does it do to the economy? This is the biggest problem that nobody explains to you. And let's see now, the best part. Is it only America? No, it's almost every country in the world. Look at this. Canada, the UK, New Zealand, Australia, Sweden, Hong Kong have no reserve requirements. So these guys are global, man. I mean, what can I tell you? They think that the Colombian cartels and Mexican cartels are like a criminal organization. Look at these guys. Zero, no problem. We can print as much as you want. Just it's not a bold guy. Somewhere is going to be a guy like this a little bit. On the other side is going to be maybe somebody, Aborigine in Australia. But it's the same story. We can print as much as we want. It goes everywhere. This was from my country as well. 2% in Germany. It's everywhere. Almost every country has zero reserves for the banks. So we come to the actual problem. So where does this money come from? These people that are actually doing this magic, somebody needs to stand behind them. Otherwise, we will have 2007 again. We'll have a big collapse of banks that is going to spread everywhere. The bold guy says, don't worry, guys. There is an infinite amount of money in the Federal Reserve. Federal Reserve is actually the Central Bank of America. Now, how do they do the magic? This is the best part. When they print money, they do it and they inject it in the economy in three main ways. The first way, by purchasing bonds. Now, this is when they're helping the country directly. Although they are doing it indirectly, we'll get there in a minute. Through bank borrowing. Now, this is when they practically borrow to the bank in a ridiculously low amounts of, let's say, interest. Let's not forget, for the last 20 years, almost 10 years, we had 0% interest on everything that the commercial banks are borrowing from the Federal Reserve. Talking about a crime. But anyway, and the last one, the best one, through bank bailouts. Now let's remember 2007. 2007, shitload of banks hit they literally hit the face in the wall. Destruction complete. And you know what happened? Don't worry, guys. You're out, when you're pals, it's not a problem. What's like 2 trillion between pals, right? So what they did, we're going to print a shitload of dollars, toilet paper. We're going to inject it in the economy as a bailout, and we're going to pay out the people that you owe with new printed money. Now, where is the problem? Let's go back to the beers. What happens when we have $10 and 10 beers? Every beer is $1. Now, because the banks fucked up, and now it's everything literally crashing, the door magically opens, and somebody throws another $10. Guess what? Everything is inflated. Yes, the banks will give you the money, but they don't tell you. By inflating the amount of the dollars in the economy, they're inflating the prices. So what happens? Everyday people start paying higher prices because the government bailed out the banks. Let's put it this way. Who here has a company? Any kind of company. 1, 2, 3. All right. So let's put it this way. If your company cannot pay to the people that you own, do you think that Malta will call you and say, listen, bro, do you need some money? We can print out, no problem, fresh. We're going to bring you a batch warm, straight from the printer. Do you think something like this will happen? No. But when the banks fail, you know what they say? Oh, they're too big to fail. We cannot allow this to happen. So, you know what? No problem. We start the print. Now, here it is. America, look at this. Look at this beautiful line. Look. To the moon, right? How do we say? Just in this case, we're talking about printing of toilet paper. So, there is 2 types of actual tools that the central bank uses to inject money in the economy. These are the basics. So when you understand how interest rate of a central bank works and how QE and QT works, you understood the basics of a central bank. Doesn't matter if it's called Federal Reserve or if it's called Teletubbies. Doesn't matter. It's the same function, the same institution. It's the same laundromat for money. Now, how does it work? In the first case, we have the central bank printing money. But this money they cannot just give, it's going to be too obvious. Like, come on, guys, you cannot just give them. So what do? They say to the central banks, listen, we're going to lend you money. Let's say we're going to say 2%, right? And then you can take this money, because they are newly printed, and you can give it to John, Jack, and Jill for 4%, right? So you make 2%. We inject money in the economy. We play like a, you know what? Look at the economy. There is a lot of money circulating. Everybody's borrowing. But this is practically one of the main ways that they're, let's say, boosting the economy, as they say. How are they boosting the economy? When you are the only one that controls the actual interest rate, everybody needs to follow. So how does it work? Let's say at the beginning, the interest rate of the central bank is 2%, right? So if a commercial bank needs to take loan, they will take it by 2%, but they need to give it to somebody else by 4%, right? The difference between the rates is what they make as a profit. Now, how does it work? The problem is this is not a fixed rate. So the central bank reserves the only right to push the rates higher or to lower them. What do they do to the economy? That way they control the economical output, the economical activity. So how do they do it? If I raise the interest rate, I'm Jerome Powell, and I say, you know what, guys, inflation I don't like, you know what, I'm going to raise the interest rates, I'm going to put them 5%. Now, every commercial bank, not only the newly borrowed money needs to be 5% interest rate, but also the money that we already borrowed. So if I'm a commercial bank, I will try to give back as much money as possible so I don't pay higher rate, right? And the other way around. If they lower the rate, I'm going to take more money because I need to use the momentum and spread this money around to make practically this spread. But what's the problem with everyday people? How do you control exactly the economy? Because the commercial bank is just the place that you take the money from, right? But everyday people, if the rates are very high, are you going to decide then to buy a house or to open a business, or you have a business, you want to extend the business? Obviously not, right? You're going to wait for the rates to come lower. So that way, everyday people borrow more when the rates are low and the other way around. So that's how they practically inject money inside and they pull money out of the system. And in this case, when you inject money, let's go back to the beers. So it's a lower rate. Everybody wants something to buy. We all start taking money. And now instead of $10 and 10 beers, what do we have again? $20 and 10 beers. So what happens next? All the prices start inflating. So we have this magical circle. And when the prices start inflating, then the central bank needs to step in and do the other way around. Now they need to make everybody pay faster and don't take as much loan. Well, we go the other way around. When you make the rates higher, guess what? Everybody starts paying faster, so you don't pay this kamatsu like interest rates for a long time, and money comes out of this room magically. Prices go lower. So this is how it works. But the problem is that they are misusing this. In the last 20 years, we had around 10 years with zero interest rates, which means money were not only printed, money were literally given away. Never in the history we've heard something like this. Never. And then they are saying, I don't know where this inflation came from. Magic. I don't know. First time happening. We had never seen this before. Now this is how it works. Historically, this is how high were the interest rates of the central bank, and in this case of the Federal Reserve. Look, in the time that there were the embargo of oil and everything, the rates were almost 20%. Look at this now. We had from 2007 to 2022, more or less, with this small bump here, 0%. So zero. And look at this. JP Morgan, Jamie Dimon, Citibank, Bank of America, everybody, look at this. This is how much money they have borrowed. Look at this. As the rates are going lower and lower and lower, look at the borrowing from the commercial banks. So can you imagine how much money they actually borrowed and just gave to the system, to every one of us? Now, we don't talk about 10 beers, $10. We're talking about $10 million and 10 beers. Do you understand what's the difference? So can you imagine how inflated the prices are? Now, the second instrument, which is even better, is the quantitative easing and quantitative tightening. Now, you know what? Since this was not enough, and they have to somehow help the government. Now, the central bank and the government in every country need to be separated for a reason. Because if somebody gives the printer to this orangutan that sits in the White House right now, he is going to not press, he's going to sit on the printer until it breaks. I mean, we've seen this before. When Shish Kebab Efendi, that's how we call the Turkish president, you know what he said in 2011? We don't need a central bank, give me the printer. He managed in 1 year 70% inflation. Because we don't need a central bank. Why will you keep separate? Give me the printer, I'll take care of it, right? So this is the situation. Look, how does it work? The central bank cannot borrow directly to the government. That's a crime. The moment you do that, you have a centralization of power. That's not democracy, that's autocracy. But let's play a game. You know what we're gonna do? We're gonna use the commercial banks. So the commercial banks are buying what? They're buying treasuries from the country, from the government. And in this case, the central bank cannot buy the treasuries directly because that's a crime. You cannot buy straight from the country. What you do, you print money, you give this money to the commercial banks, they give you the treasuries, and guess what? The circle goes on and on because the banks are buying treasuries more. So practically what happens? You use the commercial banks as a medium to inject as much money as possible directly to the government. And what does the government do with money? What saves it? Have you seen, who watched over here 2.5 Men? There was an example that I'll never forget. So there was this accountant, he's talking to Charlie, he's like the main character, and he's like a party boy, you know, he's very famous jingle writer, doesn't matter. The idea is he's making a lot of money. And at one point, there is no money. He doesn't understand what happened. I cannot pay my bills. So he goes to the accountant. The accountant says to him, listen, let me show you how does this work. So he says, if I take a cup and I put a hole in the cup and I put some water, this is how a normal person spends money. So you actually pour some water and you pour a lot of water, practically the cup is full. And this small hole is actually your expenses, right? You pay rent, you pay something, you indulge, for example, you buy something small for yourself, but there is enough for you to actually save some and live for the next month. You can pour some more water, right? And the guy takes a pen. He says, let me show you what's the best part about you. He takes the cup and he starts, but like this. The best thing I love about you, he says, the money goes, the money literally goes through. Nothing stays in your cup. This is how the country spend money. This, like literally, whatever comes, goes straight away out. They don't care. You know why? Because they can print more. And who does that for them? The guy that is just having his press conference in America. So, as we said, quantitative easing. In this case, they lower the rates. So they allow the banks to borrow more because the rates are low. And they buy what? They buy more treasuries. So they have a balance sheet. This balance sheet is actually this blue line where they collect treasuries. And they do not liquidate them. Even if the treasuries come to the point that they are practically extended to the end of the date that they need to be maturing, and you need to practically take the money back from, they don't do it. They just collect them. Look. So what happens? They actually collect the debt from the country while printing money and borrowing it to the country through the commercial banks. So what do? They are actually hiding the debt by printing more money. And who does that hurt? Every one of you. Because what happened to the bills? They get more and more expensive, right? So this is how it happens. Because they print money, they borrow it to the country, and that way they call it portfolio. This is our balance sheet. No, this is the debt that you hide for the country. And the other way around. Sometimes, very rarely, we've seen this once, twice in the history of the central bank. They go the other way around. They make the rates very high, and in the same time, they start selling this portfolio that they have from treasuries back to the market or back to the country. And that way, they do quantitative tightening. In this case, they are contracting the economy. So the prices fall. But also, what happens next? You guys lose jobs, businesses start to close up. This is how the normal economical cycle works. Now we come to the best part. This is the understanding that I want you to have. No matter what they do, short term, QE, QT, whatever, they can call it whatever they want. What do we see common for every country in the world? The money supply continuously grows. So today we have $10, 10 beers. Tomorrow we have $20, 10 beers. The next day we have $30, 10 beers. And so on and so on. Look, It never stopped. Never. And every time there is a crisis, guess what? The printer works extra hard. 2008, what do we do to solve the problem? Print more. 2019, what do we do to solve the problem? This is the best part. They printed out 40%. So let's say until this point, we had, let's say, $10 million, right? So this guy that now, he says, I don't know how the inflation goes. He decided to print out 40% of this 10 million and inject it in the system. So 40%. So he managed, instead of this $10, to add $4 more, right? But how big is this? The inflation went up to 9%. And he says, I have no idea what this happened. But I really don't know how did this happen. And again, here's how it happens. Everybody, like people in kids in kindergarten know how it happens. But anyway, they can do it. So what has happened? As the money supply grows, the baseline is the dollar devalues. Now, after 1930 to 2020, we already had 99% devaluation of the dollar. So if $1 was valued, let's say one McDonald's, let's say McRib, whatever, now you cannot buy it with $100. This is how much it devalued. And I would encourage you to just open now and write prices of McDonald's in 1970. And you're going to see that for $1, they were buying like a full portion with, I don't know, stripper on top, right? Now for $1, you cannot buy a napkin in McDonald's. But check, you're going to see how much it devalued. Now, why is this so important? The same way every currency in the world devalues. Doesn't matter if it's yen, euro, dollar. Guess what happens next? The value of the gold goes where? Vertical. How much did we reach? 4,300. It's like a meme coin. I seen this last time as when a Dogecoin hit like 3,000% last time. What happened to the home prices? Let me ask you. They never stop growing every year. I would ask anybody from you here that was, let's say, 5 years ago. The rents, let's say in 2019, were like 300, 400 euros. Now the rents are like 800, 900 euros for one bedroom apartment. And we're talking about 4 years, 5 years. Can you imagine how much they're growing? What do you think this is magic? No, this is the printing of money. What happened to Bitcoin? Look at this. It's like a paradigm. As the money supply grows, price of Bitcoin grows. S&P 500, NASDAQ, Russell 2000, Dow Jones, Nvidia, everything grows. This is not because they have too much value. It's because people are printing money, and these beers are becoming more and more expensive. Every time somebody prints money. And the best part at the end. So these crackers, because they were so good with the financial system so far, they did wonders. They managed to devalue every currency in the world at least 99%. You know what they're saying now? Listen, since we did so good with the economy, why are we bothering to print money? Let us, with one button. Why? We save the environment, the trees. Instead of printing toilet paper, we can just create one button. As Lagarde says, don't worry, I'll be responsible. You don't have to worry about anything. Look what we did so far, right? So this is one of the things we really need to work to stop, the CBDCs. And this is the actual truth how it works. And to make my point, just give me a second, I'm coming in a minute. Now, thank you all. To give me a ledger. This is the pickup. As you can see, this is the raw energy. Problem, future, no more expensive trade. Don't So this is pickup. I think this makes the point, guys. Because at the end of the day, you understand? This one. Do you understand how important this is?
This main slide.
So that's the most important part. At the end of the day, you need to understand how important the crypto and Bitcoin actually is. Because at the end of the day, nothing will save you as this. Currency cannot be devalued if it's with a hard cap, like Bitcoin, right? We have 21 million. Nobody can print more, right? Nobody can print more. Nobody can create more. The best part, nobody can take it away from you, except for us now, obviously. But the other way, nobody can take it away. They cannot ban it. They cannot tell you what to do with it. Doesn't matter if it's Bitcoin, Ethereum, Chainlink, XRP, whatever. If it's decentralized enough, it's hard money. What they're teaching you, there is money. This toilet paper that they're printing, there's no money. So this is the most important thing that we're trying to teach people in our country and from next year in English, obviously, through the world. This is what you need to know. Basic financial education is the most important thing you need to know, because no matter what you are, engineer, doctor, I don't know, cosmonaut, doesn't matter. They will steal from you. This is what you need to learn. And now, please.
Thank you, guys. Thank you. Thank you, Lord. I want to tell you guys. Any questions? One? I don't believe that. Yep. Speak loudly.
Okay, so in that draft, we have
Nema trina, nema mesta za zakon. Čekaj nadzor. Treba da pregledam. Šaret od meni.
Exactly. Then they break.
Imaće mnogo dobro da ti kažem.
How small it is. But before, you see the rapid devaluation and we're going back. This is the First World War, Second World War, which means even before they made the system to be everything valued in gold, they were still doing the same. That's why it devalued from before. And then they slowed the devaluation extremely to just follow backwards when 1971 they just stopped the gold standard. So from 1944 to 1971, they couldn't print. If they wanted to print, they had to buy more gold. So they buy more gold and they print more money. Obviously, they were finding ways. Since then, you can see it was devaluing no matter what. But it was a lot slower. That's what I'm trying to say. Let me put it this way. Let's take an example. This is not the first example of devaluation of hard money. Let's take, for example, Rome. Rome did the same. They said, you know what, we're going to have silver coins. So they had the silver coins at the beginning. The silver coins were, for example, 10 grams. And they were all the same size, all done the same. So we came to the point that the Roman Empire started going backwards, right? So these guys say, listen, we don't have enough money. You know what? Instead of 10 grams, you're going to make them 8 grams. So they made them smaller, and on every practically 10 coins, you have additional one, right? So the devaluation is not from now. It was always happening. Just they were finding ways to do it. But still. Exactly. Later on, they did that as well. They practically added something that you cannot actually see that is not silver, enough to practically make more coins. But what I'm trying to tell you is countries will always find ways to devalue. But if you give them something that is hard, like literally hard cap, like Bitcoin, you cannot you cannot do anything. You cannot touch the system. The button for printing is away from you. You understand my point? Yeah, of course.
You know, in regards to inflation, if you go to the store, not do this one. Once you start, let's get
nobody's buying. Capitalism. This is the basis of capitalism. We're going to produce as much as we can, but we are not going to sell it for less, no matter what. Let's put it this way, for you to understand how crazy it has become. Now, this generation of baby boomers, oh my God, they're the best. You know, in my time, we were doing like this. Okay, let me tell you about the baby boomers. 1960, 1970. One family in America could live with one wage, 3 kids, wife doesn't work, they still could educate all the kids, send them to higher education without taking credit loans. They could pay off a house in less than 3 years. Can you imagine a house, not a one-bedroom apartment? We're talking about a house. So they did all this before the value of this, whatever they're calling sound money, we call it toilet paper, was the value to health. So what I'm trying to tell you is, we have forgotten how it was before, and nobody wants to even mention it. Because before, when this money was not inflated like this, when the central banks were not printing like there is no tomorrow, people could actually survive on one wage. Now, how do you know how they say in my country? They say, so how much money do you need for 4-member family? They say it like this. You need to have at least 2 people working, at least 2 people doing drugs to survive. Literally, like to this point. And what can I tell you? Printing money. Believe it or not, there is no other phenomenon to explain that everything is going up. So when you say, okay, you know what, but the rent is going up, that's normal. No, guys, it's not normal. The rent to go up, the food to go up, wages are not going up. Like literally every service that you know is going up, but your wage is staying the same. So inflation is real. This is not a joke. And it's happening to everybody. You need to understand where is this coming from. Anybody else?
Anyone else with a question? Yeah. Alvaro here. What's my question?
Yeah, I would like to ask you if you think inflation is per se bad. How do you think that the cost of production affects stagflation or deflation?
The cost of production. So, inflation is obviously bad. Why did I say this at the beginning? Let's put it this way. What did we say? If we have hard money, let's say that in this room, nobody can put more money. If there is only $10, it will always be $10. But as I said, there will be always new product, as you said in this case. So if we have hard kept money, production will always rise. This is a normal thing. In a normal economical society, when you do not disturb the money supply is fixed, there will always be more value than the product. Because products always comes more and more. Take any currently production, as the gentleman mentioned. NVIDIA is producing more. What did the gentleman say? We are throwing food away because nobody can afford it. And it expires, we need to throw it away. If you have hard cap money, the money will be practically always more valued than the stuff that we produce. Because as I said, you produce more beers, but you don't produce more money, which means over time, the beers will get less expensive. Now, in this situation where we have inflation, which is caused by the printing of money, the production, no matter how much it goes up, the price will go with it because you have inflated. They are practically going the opposite way because you do have production. What am I trying to say? In every society that you have a lot of something, by normal economical rules, it should start dropping the price, right? But what happens now? The price that you're valuing in is something that is currently constantly losing value. So yes, maybe over time, because we have 10 million apartments in Malta and people cannot buy them, naturally, the price should be going down. There we go. This is a very good example of that. But what happens? This is the price of the apartments in Malta, right? And this is the value with which you're measuring. The value of your money is constantly losing value, which means the price of the apartment is not moving. Just the amount of money in the system is going more and more and more. In this case, this is what is producing the constant rise of price. And in this situation, can you tell me again the stagflation and?
Deflation.
So deflation we cannot have until we stop the actual amount of money being printed. We have some situations like China. China currently is experiencing deflation. But this is because their economy is so inactive and the central bank cannot push them to practically buy internally. All that is produced in China is going outside automatically. Not enough economical activity. People do not waste a lot of money. You are going to deflation because what happens? If people don't buy, prices don't rise. Everything that is produced in China goes out of China. Somebody else buys. Automatically, in the economy of China, you have deflation. Believe it or not, the prices are going down. But this is just a phenomenon. On the long term, nothing goes down. This is just a small piece of the puzzle that you can see over time. It goes the other way around. something like this, or I'm just trying to understand what is the correlation you're asking me about, because this is what I understood.
So my point being is that not all inflation is bad. If there is zero inflation, then there's not going to be velocity of the money, so there's not going to be consumption. Therefore, cost of production cannot go down. So there is a bit of invisible inflation that is good for the economy, which the economists put around 2%, something like that. So I think a bit of inflation is good. It's not that inflation is bad, but of course you have to consider the cost of production equation, because you have inflation, so the items are going down on their own, and then you have cost of production going down as well. But then it will go down so much that for the company to keep producing, it will be non-profitable. It will be better for them to hold on their cash and just wait for the cash to appreciate, which goes against economic principles. You need to keep the economy working. If that makes sense.
That's actually a normal economy, believe it or not. There is always a boom and bust cycle. What he said is correct. Why did I say China? Did I say the same example like you? What I'm trying to say is that what happened now? If economy, nobody wants to buy. This is a normal cycle where people are scared to buy. As he said, we're coming to the point that will you produce more if nobody's buying? Let's say you were producing, I don't know, fridges, right? So you have a company for fridges. Last year, they bought 10,000 fridges. So you're saying to yourself, okay, I need to produce 20. Look, people are buying. But you produce 20, and then this year, for X amount of reasons, they don't buy. They buy only 5,000. And you have extra 15,000 fridges. This is how we come to the point of deflation and of an economy that is in decline. Recession is the normal part of a cycle. Just that's what I'm trying to say. Every recession they're trying to fix with printing more money. So in this case, if there is a normal economy, when you have a cycle where a producer is producing a lot, he sees that nobody buys it, what happens? This is the normal period of practically going backwards, right? This is the deflation, and practically what you're doing. As a producer, you start letting people go. You're lowering the production until the economy picks up. Sooner or later, people will need fridges again. This is the normal cycle of going up and down. How many times we've seen that? Let's take the last cycle. As he said, inflation is normal, but the problem is the inflation we have is like on steroids because it's inflated by the money against what is happening in the economy. So 2021 we had what? Everything record high, S&P 500, Nasdaq, altcoins, Bitcoin. What happened? 1 year of recession. Recession is a normal thing. Every economy, everything that goes up, there is a period of cooling down when inflation is very high, and by practically people not being interested in buying, they are naturally reducing the inflation because the prices are falling, as the gentleman said. If you have refrigerator and you have one refrigerator for 800 euros, right? Next year, if they don't buy, what do? You lower the price. Automatically, you lower the inflation. And if they still don't buy, then you stop producing or you lower production. You let people go to lower your cost. As he said, this is the production practically part of the equation. And you're coming to the point when at certain point you're going to meet what the economy needs. So you come to the point that they bought, for example, again after 5 years, 5,000 refrigerators. So you say, okay, slowly let's start rising, right? So you start again, and then the whole economy picks up. This is the normal cycle. We had 1 year of bear market, 2022, and then everything started going up. This is a normal cycle. 2007, 2019, 2000, all these are normal corrections of the economy. The problem is they are escalated by the printing of money. As he said, this is normal economy, but you cannot experience normal economy experience. The economy is still steroid. Right? Anybody else?
Yeah, one more question here. Actually, we have another 2 questions. But please, guys, keep it short.
Thank you for the presentation. I believe you did a lot of research. So can you tell us how historically these things played out? Like, how will this whole thing end?
Voltaire had a very, very good idea about it. See how it ends? Always, every time a country overprints money, we come to the point that money are valued like this. 500 million dinar. This is Serbia. It's very close to us. So at one point in Serbia, it was so bad that you sit down to eat, you order, and by the time you get up, the food is more expensive. To this point, believe it or not, there was a time in Venezuela. I can tell you because I know people from there. you get the money for the day they were paying them per day, because otherwise it loses value. Until tomorrow, it might not be actually nothing. You cannot use this money anymore. And this is what they're using them for now. Decoration. So this is, as Voltaire says, every printed money eventually returns to its true value, zero. Doesn't matter if it's a million. You know that. This is a very big problem with the people. Why? We are living through cycles like the cycle of Rome, cycle of Nazi Germany, cycle of Great Britain, all these amazing empires. When you live through them, they're saying to yourself, this cannot fail. I mean, the time when Great Britain was great, people were saying, no way, how can they lose? And they always lose the same way. Overprinting money. Extremely big debt. Always. I would if I can, Ray Dalio. Check Ray Dalio. He has a very nice video, which is like around 40 minutes, but it's amazing. He goes into detail because I will need like 3 more hours to explain. The idea is that every empire in the world ended the same way. Overextension of military assets in the world. Guess what? America has 250 bases around the world. You've heard it somewhere. Rome, Great Britain, Portuguese, Spanish, etc., etc. Second is over-evaluated. The debt is through the roof. America managed in 2 months to get 1 trillion on their 37 trillion debt. Now they're 38, believe it or not. Who wants to congratulate them? Same way, over-inflating the value.
Okay, so I have a question for you. The last one. How does de-dollarization fit in this picture?
Now, what happens? Okay, we come back, let's say, the example for the Roman Empire. If you see that these people that control the world asset, so this is the global money, right? What does Trump say? I really like the dollar. Yes, but nobody does, my friend, except for you. Believe it or not, the people that use it, they have to, because otherwise you're gonna come with the tanks and the planes, etc., etc. Guess what? Who was doing the same? The Dutch were doing the same. The English were doing the same. Everybody was doing the same. So what you see in the BRICS nations right now, they have a lot of bilateral agreements for using their own currency. This is just the beginning stage of a failing empire, the one that we've seen God knows how many times in history. So now what they're doing, they're not using the dollar to exchange between themselves. This is just the start. They will have a lot of, let's say, these kind of solutions, like they build their own settlement system. They're using Chinese settlement system. They're using Russian, which means sooner or later, de-dollarization is not a matter of if, it's a matter of when. And we see it happen every day. As the gentleman will maybe show you, the usage of dollars in foreign exchanges in 1970 was around 80% of all the exchanges in the world. Now it's around 50. So in the last 50 years, they have managed to lose around 20-25% of the dollar as an exchange asset in the world exchanges. So what I'm trying to tell you is that this is not something new. This we've seen so many times. Just none of us was alive to see it in the previous cycle.
Well, thank you, Antonio. Big one. Thank you very much. The topic is very interesting, and today I wanted to use a couple of views. So the first one is this. While I was reviewing Antonio's presentation, I got so excited that I started my own investigation, and I would like to give you a homework. Right? So, there are a couple of principles in the crypto world. Don't trust, verify. So don't trust, verify. So, and I verified what Antonio said about the requirement for the fractional reserve in the bank. Also, the central European bank has 0% required. So, not because I don't trust Antonio, but because the second thing that you find in the crypto world is that you have to do your own research. And I'm speaking about this now. There are another couple of topics that I've been deepening because of Antonio's presentation. One is the ratio between the public debt interest and the tax revenue. So basically the government, any government, gets money from the taxes, and then with that money we pay institution of the cost, but also the interest on the money that it has borrowed from the central bank. And then the de-dollarization process. So, speaking of the ratio between interest and revenue, there is this kind of agreement among the economists. Whenever this ratio goes above 25%, the ice gets really, really, really thin. Okay? So the CBO, which is the Congressional Budget Office models, show that interest above 25% guarantee negative growth. So things start imploding. So just for you to have an idea, this is how the ratio changed over the last 10 years. From 6.4 to the current 1940 something. Now, I did this calculation myself, but it should be correct. So if the Fed will start cutting the rates, by the way, nobody knows because the decision from the Fed 0.25. Okay, so they cut it. So of course they cut it. So if they continue cutting points for the whole next year, we will probably arrive to 3%, right? In that case, next year the ratio will be 20.6%. Otherwise, it's becoming a dangerous 23.0%. Now, this is not keeping, okay? So, this was the table for EU. We are currently at 13, 14. So, apparently a ratio, until the ratio overcomes 40%, there is no immediate danger, I mean mortal danger for the economy. Difficulties, but not danger, not deadly danger. However, these parameters compound with another parameter, which is the de-dollarization, which reflects on the treasury yield. What is the treasury yield? It's the percentage that the market wants to receive in terms of gains for borrowing, for actually buying the debt of the government. So, treasury bond. Look at this thing. The last 5 years, as he was saying just a minute ago, is the USD share of global foreign exchange reserves. So basically, how much dollars are held in the international central banks as a reserve. The amount in total increased. I think we're now at 60. I don't remember the total numbers. However, no, 13 trillion. However, there is a relative change. There is a loss of 4.5%. Why this matters? Well, I found this article from JP Morgan. They estimate that even modest de-dollarizations could raise the the American bond yields by 0.5 or 1%. And this is conservative. You will see it later. I will not go through all the details, but I will share with you this PDF to ask me or in the group chat. Remember to scan the QR code at the balcony. The point is of the story is this one. With the current de-dollarization speed, JP Morgan estimates that the yield will be impacted by a plus 1.4%. So let's be conservative and let's say 0.5 to 1. Now, this brings the treasury yield from the current 4.5% to almost 6. Absolutely.
So what is the problem here? The higher the yield means that they need to give back more interest for every dollar they earn, which means people do not want to buy any more American debt. They are scared. They see what's happening. So what they need to do? They need to make it what? More interesting. They need to make the reward for buying this bigger. And guess what? Currently, with this reward that they're giving, with the inverted yield curve, they are paying $1 trillion just in interest on a yearly basis. For you to understand how scary this is, do you know how much they are making in taxes? 4 trillion. From this 4 trillion, every budget until now it was at least 6 trillion. which means that they need to find additional 2 trillion just to pass the year. Just they have enough money to give to the people that work in the administration. And the best part, from this 4 trillion, they're giving 1 trillion for defense, and they're paying 1 trillion for interest. This is how much they have left from taxes, and they need to find 6 trillion in total to cover a year. So you understand how big this is, right?
I'm not gonna make your head square, but please just use your AI tools. I actually suggest you use also Venice AI. Use more than one AI tool and ask them what happens to the American economy if by the end of 2026, so next year, the ratio between interest on public debt and the tax revenues goes to 23%, and the dollarization process produces an increase of 1% on the treasury. So, do your own research, this is your homework, and now we've been very, very, very serious, but for me, life is mostly about fun. So, where is Lou? You are your aunt. Lou, please come here and tell this lovely crowd.
Thank you, everyone. Thank you for the ones that dressed up. And as you probably know, or if you didn't know before coming, is now Tuesday, the 1st of so happy Halloween contest ready for Halloween for this week. So, how is it going to go? We are going to nominate 2 people that we think should the best contributions. However, all of them are very good. And I'm going to call your names out. Please come here. And then I'm going to say what happened next. So I would like to invite Ellie to come. Please give it up for her. Welcome. And the second one, I would like to invite Billy. Alright, while he's on the way, well, I'm going to know what is the price actually. So it is a seed engraver. Yes. This is what the first guy is going to win.
Do you know what is this?
Gold bar.
Well, even better. That's where you store your seed phrase, okay, of your wallet.
In the bag, in the bag.
In the
bag.
So that's the cool thing. It's one of the methods that you have to keep your wallet safe.
Okay, so now I would like to give you the mic to both of you. Just tell us why you should, why people should vote for you. And then after this, I'm going to say their names. And you, as the audience, are going to decide who's going to be the first place by giving a big clap. So then decide based on what they say who you think will win. And once I say their name, just give it up. And who receives more applause is going to be the winner. Who wants to tell us first why? Just. Okay.
Ja ti kažem pravo koji ću se ne to je istinski povednik već. Se quer ako si dovoljno broj,
And I didn't notice you, sorry. So I thought that I was the last. Thank you.
ne znam koliko je povedi,
So just, I think we need to vote because it's all not about the point or person.
Kaj glasim
Alright, so we have the winner Congratulations to Ellie for the excellent.
Ona izvede, onda mislim da izborima će donijeti.
Ma ne želimo predvide. Mali, čekaj, ne li bih mi sto?
Thank you so much, guys. 6 o'clock here at Soho, there will be the Halloween party, not alcohol party, just Soho party.
Ne, znaš, viši si nadbog, došli kratka da
And
nastavim
see
da je
you
opcija.
next Wednesday for the Zero X event. Thank you, goodbye.
Ti publici. Treba da stavimo što je sada i kreneš od
Šta li?